Good morning, traders and investors. Another exciting video today. We're going to talk about Meta and do a analysis to buy, a hold, or a sell at current conditions because Meta did have a massive pullback as its earnings. So the narrative around Meta platforms has completely flipped. For years, it was a undervalued cash cow. Today, it's a high-growth AI power horse, but also with a lot of infrastructure spending. And that's why the stock is maybe down a bit, down massively actually. So what hit? Two things hit the stock. First of all, the spending spree, and then a 50.9 billion tax charge on them. So is Meta buy, sell, or a hold? Sorry about that. I had to clear my throat. So is Meta a buy, sell, or hold at the current position, at the current price? Well, two factors we're going to take into consideration. First of all, if the current valuation justifies by its cash engine, is justified by its cash engine, and did the recent post-earnings sell-off create a generational technical buy zone, or is it just a signal for fundamentally larger problems? Okay, so let's jump straight into it. The core Meta platforms is a printing press, actually. The family of apps, which it has, Facebook, Instagram, WhatsApp, and he's trying there with Threads, is one of the most effective advertising machines ever built. So this is why it's called the cash engine. And it kind of tries to battle it out there with Google. So first of all, financial key indicators, the two sides of Q3, because we had a massive, let me just pull up either this or this. Let's pull up this one. So revenue, this is the revenue report, the financial release. So year to year, 51.24 billion, up from 40 billion. There's a 26% growth on revenue. This is also fueled by their AI-enhanced ad targeting, which increased both the volume and the price per ad. Now, there's also a little bit of profit illusion. They reported a net income of 2.7 billion here, a 83% drop from 2024, as you can see here. So 15.6 billion in 2024, now at 22.7 billion. Now, this is almost entirely due to one major non-cash bill tax change, which was that 50.9 million that I just mentioned. Also, they're mentioning it down here. We expect a significant reduction in our U.S. federal cash tax payment for the remainder of 2025 and future years due to the implementation of the One Big Beautiful Bill Act. However, the implementation also led to the recognition of a valuation allowance. My throat today. Sorry about that. Valuation allowance against our U.S. federal deferred tax assets. So basically, they had to pay 15.9 million. So effective tax rate decreased by 73 percentage points to 14%. Net income 50.9, and diluted EPS value increased by 6.2 to 7.25. So the reality, excluding the changes, the net income was actually 18.6 billion, because if you add to the 15.9, the 2.7, it's right there at 18.6 billion, which is a major growth from 15.62 billion last year, which clearly shows the underlying profitability of the company. So the company is profitable. Okay, free cash flow, despite massive capital expansions, Meta generated 10.6 billion in free cash flow in Q3. Now let's go to the evaluation question, because we take a look here at their PE fundamentals or normalized PE. You see that Meta is currently at 25.51, a average 5-year average 21.88 for them. And if we compare it to Google, which is currently at 33.95 and their average is 21, or to MasterCard 37.69, average 39, Netflix 55. Even with a drawback, average is 49, and Alibaba 20, which is the best comparison maybe to Meta, and also Google is in there. Alibaba 20.05 to the average of 2.62. So maybe that's not that bad for Meta right here. It could even go further down. That would be even a better PE. So we're currently looking at a 25 forward PE for Meta that is trading below, slightly above actually, for the 5-year moving average. Now let's talk about growth. Take a look here, forecast in EPS. This is quarterly. Actually, let me leave it here at quarter, because the next quarter, Q4, so this was Q3, expectations were exceeded. The blue candles here are the expectations, are the actual results. The gray one are the expectations, so, and also the average. So let's go here. They're clearly going to grow, or they are expected to grow their EPS. What are the growth drivers? Where AI and Reels monetization, there is not just a buzz, really doing, I'm also using AI. It's driving better ad performance, and is projected to accelerate ad revenue. The monetization of Reels is closing the gap to TikTok. So this is really exciting because the existential risk here is the Reality Labs capital expansion. So management has significantly raised capital expansion guidance for Reality Labs from between 72 billion for 2025, with an even notably larger spending anticipation to 2026. So clearly investors are asking the question, is this or will this ever be profitable? And it's kind of showing us profitability in their ads. It's an ad company. Come on, it's not a social media company. It's an ad company. They live from selling ads. Okay. I also prepared for you a really interesting table. I didn't prepare, just took it from Meta. Let's see here. So ad impressions delivered year-to-year percentage changes worldwide from last quarter, so quarter 2 2025 to quarter 3 2025, from 11 to 14%. US and Canada from 9 to 8%, so slightly down. US, Canada. Europe up from 6 to 9% quarter to quarter. Asia Pacific up from 16 to 23% to the previous quarter. And rest of the world 9%. And one last chart I want to show you. Worldwide 10%. Just normalizing here. I think they're going to grow here in quarter four. US and Canada 13% up from its 11%. Europe 19% up from the 17% the previous quarter. Asia Pacific 1%, which is down from 2%, which is just awful. But the rest of the world is 20% up from 15% previous quarter. So clearly they are growing the average price per ad. That's really, really important. They have pricing power. There's one of the most important things in a company. Just think about Coca-Cola. Can Coca-Cola increase their prices? They have pricing power, and Coca-Cola stock is going to go up. Now, let's take a look at a couple of technical indicators here. So after the peak on 29th of October, not the peak, but the last peak, as we can see, it's downtrend here, downtrending channel for now, and this just got really high. Maybe it's going to do the following. Currently massively oversold, RSI at 26.32, MACD divergence clearly on a sell signal, also on HMO cloud on a daily basis. Underneath the cloud just turned red, and we can expect this to continue. There's a high probability, but there's also a high probability of this having a bounce back, at least to its 200-day moving average. So key zones to focus on. If this does not hold, the next zone will be that 500 to 490. So let's say 570 to 500 will be I think a perfect point to add to long-term Meta shares. For now, maybe a bounce trade here would be even better. So buy in here, maybe sell a little bit here. If it continues, it would also have a test. So just not going to do just something like this and then move upwards. It basically delete this. It's more likely going to do something like this, going to go down, up, hit this, come down, maybe then go upwards. So this is where you should consider adding for more stock. But consider looking at this. This is really, really important. This right here. If this happens, then we're good to go for Meta for at least the nearest foreseeable future. So hold, buy or sell. Well, for long-term investors, if you have the stock, don't sell it. If you want to add to it, maybe just nibble on it right here. Look for this zone down here. Let me also highlight the zone. Maybe to add some more shares. So between 500 and my throat is just gone today. My voice is gone. Between 470, but it's not going to come to 470. So somewhere around the 500 and 580 zone is where you could add for some really long time Meta shares. Okay, that's it for me for now. Let me hear what you think about Meta. In conclusion, exceptionally good company. They do have revenue. They do have pricing power. Let me hear what you think. I'm Norbert Menhardt. This was Wealth Dom, where I build and protect wealth. Like, subscribe. Catch you next time. Bye-bye. Bye-bye.